Hi, I'm Bruce Lane from GTI Energy. We're developing our ISR uranium project at Lo Herma in the Powder River Basin in Wyoming. Looking forward to updating our resource shortly and putting out a scoping study.
Bruce, good to see you again. Been a while, and a lot going on in the background now. Well, first of all, we've got to address the thematic. I mean, you've been down in Adelaide for the Global Uranium Conference down there, and also over at the NEI. So, what's the news? What's the industry saying?
Yeah, look, I can't really report anything different to anyone else who's commented on it. I think clearly there's a lot of enthusiasm both in Australia and the US for uranium. The political backdrop is a little bit different, obviously, with the Australians still trying to figure out who's going to be allowed to do what and whether they're going to be allowed to build nuclear power at all, which is a stark contrast to what's obviously happening in the States, where the utilities and the industry are, I won't say frantically scrambling, because they never appear to be frantic, but I think there's certainly a focus on where is the uranium going to come from for the fuel for the current fleet, and what does growing the fleet look like, and there's some big challenges there, but certainly a very good thing to go to Kansas and speak to fuel buyers and hear what the industry is concerned with.
Right. Well, those seem to be the same concerns for the last 5 years. I mean, what's changed, though?
Oh, look, I think there's a couple of things have changed. I think the Russian ban, or the ban that the US put in place on Russian imported material, has changed things quite a bit. There was a really good presentation from UXC, which really illustrated that the Russians are short uranium. And I think the Kazakhs were there as well. I know you had Dustin on a couple of days ago. And look,
he mentioned you, by the way, just in favourable terms. So just so you know,
no, it was. And look, he's one of those people who's been around in the industry for such a long time. It's really good to get his perspective. But look, the industry, I think, is really waking up on the fuel buyer side to the fact that it is going to be a challenge. We gave a presentation at the conference about the realities of actually, finding a deposit and pushing that deposit through to FID. And I think the industry really has been so focused on conversion and enrichment and restarts that they really haven't turned their minds properly to the yellow cake. And I think that is now starting to be a real conversation. So it has changed, I think.
Right, okay. So supply, though, seems to be the bottleneck here. Demand, we can, every day there's news stories. It's almost like we don't need any more news stories. We get it. The demand is there. Reactors are being built. SMRs are coming. Micro reactors are coming. All good. We need cheaper energy. We need more consistent energy. The supply side, however, from uranium through to the enrichment is in short supply. We've seen Kazakhstan form relationships with China, with Russia, etc., and that seems to be heading east. The US talking a good game. Biden's talking a good game, tripling of nuclear energy by 2030. How's it going to happen if they're not? They are supporting in a small way downstream, but nothing's going upstream. It seems. What do they need to do? How can they help you?
Yeah, look, one of the key themes that you're hearing coming out of the White House now is about regulation and permitting, and I think that's up and down, the nuclear fuel cycle, including at our level. Now, having said that, we're in Wyoming. That part of it, permitting, is not necessarily such a big deal, but every month or 3 months or 6 months faster that can happen is obviously a huge benefit. And so we know that, the new team in the Trump White House are going to be much more focused on the pragmatic side of getting things done. And so they're industry people, by and large, that are getting put into some of these positions. So we think that's one thing they can do, is really focus on that. The other side of it, though, whether a genuine stimulus can be provided down as an exploration credit or something of that nature, we'll have to wait and see on that. The biggest thing that can get us moving, though, as an industry on the supplier side, putting aside export bans, import bans, all those things, it really comes down to the commodity price. And at this point, whilst around $80 makes our NPVs, our notional NPV, because we still only have an inferred resource as we stand today, which we're obviously hoping to change by the end of the year. But, that $80 number's not too bad. We've seen restarts in Wyoming on that basis, but it would be a lot better if it was $100 or $115 or $120. And we're certainly hearing reports on the contracting side that some utilities may be paying, in order of, $100+ on contracts. So that's going to be the biggest thing. And we think that's happening now. It's just not reported. We don't see it being reported, but we believe it's happening.
Right. Okay. So, price will be the cure-all for everyone. Do you think that's true?
Well, it'll certainly help. The other factors. I mean, it takes time particularly for any uranium, any resources project. It takes time to de-risk them and get them to a point where they're investable. And I think if we look around at our peers in Wyoming, there's a few exploring, but they're still a ways off. Well, we don't know for sure, but they still look like they're a ways off being able to put a resource out, let alone a scoping study, and let alone get it permitted and get it into production. So time is a huge factor. We think we started early, back in sort of 2019, 2020 in the States, and we think that's a big factor. I think there's not many things around that are ready to take the next step at the moment. So look, time is a big factor. The uranium price is a big factor, and then of course, obviously, you've got to be able to execute around the exploration side and getting through that feasibility stage. So there is a limit to the number of people that are out there that know how to do this right at the moment. So having some of those people on board is obviously a big step up as well.
Okay, well, time is money. I think that's the other factor here. So without actually saying money, time is money. You've got a portfolio of assets. You've got 4 assets. You're focusing on Lo Herma, and you mentioned it just then. This resource expansion that you're going to need to deliver, I guess, to say, one, we've got a bit of scale here. Maybe the economics will follow swiftly after us, given its ISR. Where are you today? In fact, remind people what you've got and remind people what you're trying to do and why.
Yeah, so we've got a resource at the moment of 5.71 million pounds, and it's in a grade range around the mid 600 ppms, which is production grade in the Powder River and in the Great Divide. So there are some projects with higher grade than that, and there are some with lower grade than that. So we're certainly in that production grade range. So what we've been trying to, we've got an exploration target on top of that of an extra 5 or 10 million pounds. So what we've been doing with the drilling over last season and this season is to bring the confidence level up of that resource and grow it. So we've extended the strike to the north of the project area, and we've also latched onto some deeper mineralisation in Fort Union Formation, which is what Cameco produces out of 10 miles to our east. And so we're targeting bringing those pounds into resource and getting an upgrade in the early part of December. Look, we're targeting in that 7 to 8 million pound range. Why is that a significant number? Well, that's the size of the Shirley Basin project that's owned by GTI Energy, about 40, 50 miles away down in the south of the Great Divide area. And it's also about the size of enCore's Gas Hills project, which they are doing some work on at the moment. And it also has a PEA on it. So both of those projects around the 8 million pound mark are both economic. With recent PEAs, particularly in the case of Shirley Basin, it's a PEA that came out during this year, and they've gone FID on the basis of that. So what we're looking at is that would be what we're looking at as a minimum size for our scoping study, and then with the potential on top of that, hopefully we can maintain an exploration target of another 5 to 10 million pounds on top of that. We'll just have to see where it falls out. And look, the challenge is to put a scoping study around it as soon as possible that shows that it's amenable to alkaline leach, and it's analogous to the other projects, the other alkaline leach projects within 50, 100 miles of us.
I'd say you're like a sub $100 million company, right? You'd argue, I suspect, you're not getting value for the pounds in the ground. You're not getting value for the exploration potential. You are talking about doing a scoping study. So I guess that will give some people some kind of clue as to what the potential is here. But then you're going to need to demonstrate the ability to get the money to do the things that you need to do to advance that, or come up with another plan where you're using someone else's money, whether you're selling it, whether you're JVing, whether people are farming in, or you're getting some kind of other industry player to come along with you. Because I think the much touted theory about how Wyoming, realizes its value is there's got to be a lot more M&A going on. So how do you view the landscape? How should your shareholders and anyone looking at this view the landscape?
Yeah, I think if you go back to our kind of first principles approaches, we've got to show that the asset has value. We've got to put a story around it. So we're doing that. But at the same time, obviously, we've been exploring all of those potential futures for how we commercialise the asset. And look, the way the market's been for junior uranium companies over the last 6 or 9 months, it seems like it's a bit of a stretch if you want to raise $10 or $20 million. It's going to be difficult with the capital structure we've got. So that's just a reality. Now, we don't expect the market to stay the way it is forever. We expect that it will improve at some stage, but that nevertheless, we're looking at other ways to fund and finance the project that aren't diluted to shareholders. So I think until we get to the point where we've actually completed this bit of exploration, this resource upgrade, which we're expecting in the first half of December, and I would say until we've actually put the scoping study around it, and we can do that, we think, pretty fast. We think we can get that done certainly in the first half of next year and maybe even in the first quarter, and we're funded to do that. So we think that there's a point there of inflection, a catalyst, if you like, around an understanding of what the value of the project is. And we may be able to drop that at about the time where the industry is really starting to come to terms properly with the shortage of uranium on the planet, and certainly the shortage of uranium in the US. So whether we can find a farm-in partner, or we can find somebody maybe we could even sell the project. Those are all options we're looking at. And really what we've been trying to do is generate that optionality. And we've got a team that can move the project forward. As we've got partners in the US at the moment. It really comes down to a question of how the project is funded. And at the moment, the value of the project would seem to be less than or around $1 a pound of uranium. So it doesn't suggest to us that it's the right time to be transacting at those levels.
No, okay. So I just want to be clear about the potential step change here. So you're saying you're fully funded for the delivery of a scoping study. So step one, get this resource upgrade process done. Then you'll move to scoping study, which you're fully funded for, and you could get delivered by, say, in first half of next year.
That's the plan. We've got a shortfall from our rights issue, which we'll try and put that away before Christmas, and that'll certainly help. But we're not looking at a major capital raise, additional capital raise of any kind between now and when we do the scoping study. Based on what we see in the market today.
Okay, so I'm going to maybe ask the same question in a different way, because what I need to believe, if you can deliver those two things, is that if you can say, well, there's £8 million here in the ground. You're saying there's enough case studies of some of your peers where that's good enough to get things going, i.e. move through the phases to try and get revenue flowing. That's what I'm hearing.
Yeah, look, and I would sort of take one step back and say 7 to 8 million pounds. I don't know whether we'll hit 8 million pounds. I'm fairly confident that we'll do better than 7, but let's wait and see. I guess the other thing is we're using a price assumption based on current long-term contracting reported pricing, which is around that, $80, $81, $82. I think if you look at Shirley Basin, Energy Shirley Basin PEA, they used $82 to $86, which I think is still a pretty conservative number. Now, by the time we do a scoping study, the long-term uranium price reported might be higher than that. But even at that $80 level, if we look at those publicly available reports from both Energy and also we can obviously look at Peninsula's, and you can look at enCore's Azaga. What was the Azaga project? The Gas Hills project. They all have attractive NPVs and attractive IRRs based around that sort of $80 price and an all-in sustaining cost of around about $40-ish, depending on the acid projects are slightly higher, generally speaking. The alkaline projects slightly lower. It's not, there's no absolutes there. So, we think based on that, around that 7 or 8 million pounds mark with an exploration upside potential is a very attractive investment proposition.
Right. And okay. And in terms of, we're talking about Lo Herma, right? That's what we're talking about. You've got some other assets in the portfolio, but this is quite rightly the focus. The other part of Lo Herma is the exploration upside, right? You're looking at a few pounds here in terms of this resource, but would that be the end of it? Is it what do you know about the district?
No, look, I mean, with Lo Herma, we've kind of drilled what we think is a good investment in the current environment. Would I like to drill another 500-600 holes in it? Yeah, possibly. Look, we've got 960 holes in it now, and look, these projects do take quite a bit of drilling. I think if you drill 1,000 holes and you get 5, 6, 7 million pounds, that might be a pretty good outcome. So, look, if we were to drill another couple of 100 holes next year, we think we'd get good yield from that, because we're obviously not, they're not wild. We're not wildcatting these holes. We've got a very good idea of where the trends are, and we can delineate further resource fairly confidently with extra drilling. So what we're trying to get to is a kind of minimum efficient scale of the project that makes it sensible to be able to wrap a scoping study around it, and then convince the ASX that it's then worthwhile moving towards at least a PFS study.
Right, and we've seen in Wyoming, we've seen obviously Peninsula kind of had a few bumps along the road in terms of moving towards production, and most recently another sort of couple-month delay, which meant I think that the CEO's finally said, well, this is perhaps a little bit too much for the market. I'm going to step aside, which is a separate issue. But the point is, it's not an easy road to travel down. We've talked in the past about possibility of central processing plant for an operation like this. It's low capex, $60-70 million dollars. But nevertheless, do you think stuff like that is off-putting? Hearing those sort of things like Peninsula in the background not quite coming off, or do you think there's enough success stories like your Energy, which mean that people, then need to kind of back the team?
Look, I don't think it helps. Obviously, I think the thing with Peninsula, it is a different beast. It's an acid leach. It's in the older formation that sits below our formation, so it's down in the last formation, the Cretaceous. So it's more challenging. It's the first acid permitted plant in Wyoming, and remembering it's a restart from an operation that was previously attempted as an alkaline leach. So it is a bit different. So I think the ones to look at are more enCore at Alta Mesa and Rosetta in Texas. And also, as you said, Energy's plant down at Lost Creek in their Shirley Basin project. Doesn't mean there aren't still challenges with getting them done on time and getting them to deliver at the ramp-up numbers that are targeted. But they get there, and I guess it's a case of not over-promising on these projects is a sensible way to go. But I think we've also got UEC have started up at Christensen Ranch just up the road as well. So we haven't seen too much come out of that in terms of results so far, but they have, they are getting going. So there's a few around. I think there's those are good stories. And now, whether they meet their targets is another story, but it is a very good story that they're all getting back into business, and that bodes well for what we're doing. And it bodes well for the industry generally that, that Wyoming is, and Texas, and I guess to a certain extent Utah with energy fuels, that the uranium miners are getting back into business because the economics are looking attractive. It will not be a straight line from start to the number of pounds that come out the door, and I think it's unrealistic to think that there is going to be a straight line. even though the cautions are always put out there. So we see it as being broadly positive, albeit that Peninsula is probably not helpful.
Right. Okay. For you, I think you've kind of laid out what's next, timings, etc., and the fact that you're funded through to to a real scoping study. Are you having discussions in the background? Are you evaluating options as to for Lo Herma, which is not just a case of securing what Lo Herma could be, but it's securing the future of the company in the sense that could give you the backing of the balance sheet to do what you want elsewhere. You're still kind of confident about the rest of the portfolio?
Yeah, look, I think we have got a number of options in the portfolio. Clearly, the assets in Utah, we haven't spent much money at those assets for the last couple of years, but the environment down there with ISO taking over Anfield, and remembering that one of our projects is, it's almost a stone's throw to the Shirley Canyon Mill. It's just, we're on top of the mesa and the mill's on the bottom. So, look, they have become much more relevant than they were 3 years ago when Mark Chalmers said nobody's getting an offtake agreement. So there are completely different set of circumstances there. So, and then up in the Great Divide, we've got open drill permits on the Great Divide, and we've also got a drill permit now at Green Mountain. Now, we've chosen not to drill those projects this year and focus our investment on Lo Herma. And I think I would always like to be doing more, but I think it makes sense to get Lo Herma as far down the track as we can, as fast as we can within the current environment. So we've got other options there. Now, how we commercialise those next year, I think we're going to see a shift in the environment, and that'll allow us to look at other options. And there have been conversations going on over the last, probably year and a half of all sorts. But the reality for us is that nobody's really wanted to pay what we think our assets are worth, and we're happy to continue on with them. If somebody makes us an offer or wants to get involved that's got a very compelling case, then of course we'll have that conversation to secure the future of the company, as you've said. So, that's not what we're planning for. We're planning to move the projects forward as best we can in the current funding environment.